Hi everyone and welcome back to my morning report analysis of videos with me, Richard Market Analyst at Hantec Markets. On Friday the 10th of November, let's look at dollar yen, which has started to track lower. You had that bear candle yesterday confirming the uptrend breach that we'd had over the past 3 weeks. That's now sort of out of the picture, and the market is now sort of edging lower towards the test of that 1295 key breakout, which has been the basis of support throughout November. So a breach of that 1295 support would complete a little top pattern, give you sort of 150 odd pips of downside, and that would certainly suggest, I think, 1165 coming under pressure again, so a retreat back towards that October low. But what we're looking at is the market just drifting away at the moment. It's nothing too decisive. You've got the momentum indicators, which are gaining a little bit of traction, you could argue. RSI is still above 50 though, so whilst that is the case, you're not excessively negative, and the MACD lines are just sort of tracking marginally though. But I think RSI below 50 on a consistent basis, so I think that does turn corrective then, and you're likely to see 1295 come under pressure and possibly even complete to the downside. But for now, we're just sort of treating this as a mild corrective move, and I'm sort of looking at the market being impacted by the Treasury 10-year yield. 10-year Treasury yield, and that is now coming back towards the dollar yen. So this is an interesting move that we're seeing Treasury rallying as dollar yen is the Treasury yield pulling higher as the 10-year as the dollar yen is pulling lower, and that generally doesn't tend to be the case for too long, so bear that in mind, the fact that Treasury yields are now rising. So that could lend the dollar a bit of support and hold on to that 1295 support, so that is something to watch in the background. However, the key technical support obviously is 1295, yesterday's low 1308, and the hourly momentum indicators just sort of taking on a more of a corrective outlook. Nothing too significant, but just a sort of MACD lines, for example, now more sort of akin towards downside configuration than previously, as is the RSI, where the sort of rallies tend to sort of fail around 60, 65, and then the sort of corrections go to 30 or below. So this rally that we've just had overnight is an interesting move. Is that going to now get sold into? 1370 is your initial resistance, below that 1405 area, whereby you're sort of adding lower highs now. So will that sequence of lower highs continue? So I wish you good luck in your trading today, and I will speak to you later. Thank you.